I think what's really sad is he floats stock and these idiots buy it.
Hey guys, Tony here. Welcome back. In this video, we're going to review the Michael Pachter interview with Schwab Network. I posted it in my Discord on September 24th, and we've had a lot going on this week, so I'm just now getting this out over the weekend. As traders, I think it is important that we take in information from all sources. You might not like what these guys have to say, but you should listen to it. So in that light, we're going to listen to what Michael has to say, and I'm going to share a couple of thoughts with you. Remember my viewpoint on GameStop. I don't hate it. I am trading GameStop. I've been trading it successfully for over 2 years, looking for opportunities to buy it cheap and sell into run-ups. You can see some of my recent trading history here on the screen, including the most recent purchase I did on the dip back on September 11th and getting out of that trade at the end of this week on September 24th. In this video, we're going to break down what Michael is trying to communicate to us about how Wall Street values GameStop. And I think if you're trading GameStop, it is important that you understand how Wall Street is valuing the stock. Let's be real. There is a ton of misinformation from the GameStop pumper YouTubers lying to you guys about positive operating income. That is not correct. Lying to you that the stock should be valued based on book value, some 2, 3, 5x times book value. And that is also a completely incorrect misapplication of book value. And I hear people calling GameStop a value play. Not true. It hasn't been a value play since 2020 when Keith Gill identified it. The core definition of a value stock is one where the market cap is underneath, lower than the book value. That is not the case with GameStop right now. It's trading at 2x book value. Nobody who knows what they're talking about would ever call this a value play. It's a speculative play based on what Ryan Cohen is planning to do with the cash on the balance sheet. It's a speculative play if you want to bet on a MOAS. If you want to play a speculative play, just call it that, and I will have no argument with you. But all of these people lying to you guys about GameStop's a value player, GameStop should be trading at 5x book value. This is purposeful misinformation, and these guys need to be called out for it.
How are you kind of monitoring its progress here so far this year?
Well, they don't make money from operations, and I would say it's a safe bet they will never make money from operations.
One of the reasons I use a spreadsheet and take data directly from GameStop's 10Qs and track it myself is so that I can get accurate information. There are some websites, including stockanalysis.com, using their S&P global data feed that have incorrect information for trailing 12 months operating income. Now, you don't have to believe my spreadsheet. You can do the math yourself, or you could pay for the other data sets on stockanalysis.com, like the NASDAQ data feed that shows the correct trailing 12 months operating income, negative 32 million. Or you could pay for other data sources like Morningstar, who also has the correct information for the operating loss trailing 12 months for GameStop. Don't latch on to one data source that only tells you the story that you want to hear. I know these YouTubers know that there are other places they could get the data, and they don't want you to see it. They don't want you to get a calculator and the 10 Qs out and add up the 4 most recent quarters and see what the trailing 12 months operating income is. You need to ask them why they don't want you to do that. But you should do the work. You should do your own DD. And you can see here on Morningstar the total operating profit or loss trailing 12 months, negative 27.3. The difference between negative 27 and negative 32 is if you're counting the depreciation or not.
They had a super secret strategy, 3.5 years ago, hired a bunch of people, failed to execute on the strategy and fired a bunch of people. So you talk about the management team being silent. There is no team. There's the coach and there's no players. So no C-level executives there except Ryan Cohen, and he lives in Florida. I can see them slowly unwinding the business. They announced in their most recent 10Q they're going to accelerate the pace of store closures. So what you're going to see is a shrinking asset. The operations are going to continue to throw off losses. All their income right now is interest income. Ryan Cohen got the authority from the board to invest their funds. He's up to 4.6 billion of cash. So it's going to be a mutual fund. And he hasn't done that yet. It's a bank right now, and it's invested in short-term interest-bearing securities. But he's going to invest in equities, I assume. So it should trade like a mutual fund. It should trade at net asset value, which is 4.6 billion. Unfortunately, it's trading at about 9.2 billion. So the rubes who bought the stock the other day at 20 were overpaying by $9 a share. And I don't know what they think Ryan Cohen's going to do with their money. But, I would take inflows in the mutual fund all day long at 2x net asset value. That's what he's doing.
I want to take a quick moment to just explain what he is talking about here. When we look at the $4.6 billion of cash on GameStop's balance sheet, or a book value of about $11 per share, until that money is generating real income, and I'm not talking about making 4 or 5% on treasuries, because $250 million in interest income is still not going to justify a $22 price for this stock. Until that money is properly invested in generating enough earnings to justify the current price, the real valuation of GameStop is its net asset value, or its tangible book value. That net asset value relates more to mutual funds. Tangible book value per share is the value of GameStop right now, because they have no earnings from the core business. Now they can change that. They can change that by generating earnings from the core business, or investing that money in something that yields a real return. And in a later video, maybe next week, I'll explain to you guys why 4 or 5% interest off of treasuries is not justifying a $22 price. And hey, GameStop YouTubers, time for you to start digging into it and understanding it and explaining it to your audiences too. You can get the jump on me, because I'm going to explain the math here in a couple days, but I'll give you the chance to do it with your audiences first.
That's a pretty interesting way to frame it. So, Mike, how much of that is like subjective? How much of it is just pure numbers? Like, are you taking the GameStop business and like subtracting it from the investment book, basically, or how do you do that math?
Yeah, we had an arbitrary value assigned to the GameStop business, which was about $2.50 a share. But since we are seeing it decline so rapidly and throw off zero operating profit, it's really hard to value the business at anything. You could say that the name has some value, but to be honest, the Bed Bath & Beyond brand sold for $20 million. So the answer is the operations are worthless. Ryan Cohen knows that, so that's why he's winding them down. I think he has a tax reason not to just liquidate the company. He's up probably, even if he liquidates just for cash, he's up about $8 a share.
I know some of y'all are probably scratching your heads or yelling at the screen asking, what is he talking about valuing the business at $2.50 or $1.50 a share? He's talking about the core business, which has no earnings, therefore it has no value. The value of GameStop is in its book value and the little bit of interest that cash on the balance sheet is earning, which is not $22. And again, if you want to speculate on Ryan Cohen investing that money and generating a return high enough to justify $22, knock yourself out. I will never criticize someone that says, Tony, I just want to speculate. I just want to bet. I know I'm overpaying $22, but I think that Ryan Cohen can generate a return to justify it. And here is my math to explain that to you, Tony. Show me your math, guys. Show me your math. And the other thing that people are just not talking about with GameStop is the core business gross revenue is on the decline. Yes, they're doing a great job of cutting expenses to minimize the operating loss. But they also announced in the 10Q, and you can see it right here on the screen, that they are going to accelerate closing their retail outlets. So you can expect that gross revenue number to accelerate its downward trend as they close more and more retail stores. And it is going to be harder and harder for them to cut expenses fast enough to generate any sort of operating income. Now, I hope that they figure out a way to do it. This is what I am seeing right now. And that is also what Michael Pachter is trying to explain to you.
You know, on something like 80 million shares or 70 million shares. So he's got a huge gain which he doesn't want to pay taxes on. So he's going to run this as a mutual fund and generate, whatever kind of market returns. If I were he, I would just buy the S&P 500 and kick back and do nothing and collect dividends for the rest of his life. But the fools who are buying the stock at 20, they think he's got some super secret strategy to double the value of the company. And so they're willing to pay 2x before he's executed or implemented his strategy.
And it doesn't even, put anything out there, whatever the strategy may be. Nothing of it. I mean,
I know some of y'all think it's cute that Ryan Cohen is not communicating with investors since Q4 of 2022 on an earnings call. He did talk for 65 seconds in the recent shareholder meeting, but for earnings calls, we haven't had any word from him since Q4 2022. I know some of y'all think it's cute, but Wall Street does not. And until he communicates a plan, all I am thinking is Wall Street is going to be incentivized to try and short this stock. So as a trader, when I'm thinking about what is my most risk-free entry into this stock, I'm not thinking about buying a share a day. I'm not thinking that $22, $23, $25 is a great buy, knowing what the book value is. I'm thinking I want to get in really, really cheap because there's no communicated plan. That is what I want you guys to think about. Wall Street, without a plan from Ryan Cohen, is going to be incentivized to push the price down. And so I think you have a lot of opportunities to wait for that price to get pushed down and then sneak in there and buy it at a low price. And then you can hold that forever or you can trade it like I do. That is up to you. I'm not going to tell you what to do with your stock, but I think there's a lot of opportunities if you're patient to pick this thing up cheap if you understand how Wall Street is valuing it and what they're most likely to do, which is to attempt to push the price down.
It's almost like I don't want to poke the bear and stir the hornet's nest, but is there any precedent, and is it legal within the CEO bounds to not have any? I don't know if legal is the term, but just is there any precedent? Is there any recourse that an investor might have for a CEO who's basically promising stuff, not doing anything, and then essentially turning the company into a ETF, which I can pay 20 basis points for somewhere else? Right?
They have not had an earnings call for about 3 years. My understanding is their annual meeting was something like 8 minutes long. He made a speech saying, "Thanks for trusting me," no Q&A. So nobody's allowed to talk to them.
Hi, everyone. I want to take a moment and discuss the retail business and future of Gamestop. With respect to retail operations, we plan to continue reducing costs and focusing on profitability. Revenues without profits and prospects of future cash flows are of no value to shareholders. This means a smaller network of stores with an expanded assortment of higher value items that fit into our trade-in model. Having a strong balance sheet, especially in times of economic uncertainty, is a strategic advantage. While the future is always uncertain, the last decade's monetary and fiscal policies, both within the U.S. and globally, are historic anomalies. Exiting from an ultra-low interest rate environment is likely to have unforeseen reverberating effects across the economy, as seen with inflation hitting 40-year highs in 2022. Under the current interest rates, an investment made in today's economic climate must bear a higher return threshold. As my father always said, actions speak louder than words. We are focused on building shareholder value over the long term. We are not here to make promises or hype things up. We're here to work. Thank you for being a shareholder.
They don't have a C-suite. I mean, Ryan Cohen is the CEO. The CFO is some guy who got there 2 years ago as the controller. And since Cohen's fired everybody who ever worked there, they have a guy nominally as CFO and they have a general counsel. That's it. There's no COO. There's nobody who's doing merchandising. There's nobody senior left at that company.
Now, can we just be real for 1 second? If this was any other company, and you can pick a few of them, I'm sure you can think of a couple tickers. If this was any other company that's run through 3 CFOs and not hired a new one, just designated a principal financial officer, if it was any other company, those GameStop YouTubers would be pointing it out to you and telling you what a horrible situation this is. But for GameStop, They're just willing to say, oh, it's part of the plan. You got to understand, guys, you got to look at every company equally. No one company gets a special pass here. This company has a vacant executive suite. And if you're honest with yourself, that could be a sign of a problem, or it could be the sign of a wind down, like we talked about on the live stream just about a week ago. And maybe that's something they're doing. We will have to wait and see. I don't know, but I think you should be open to all of the possibilities so that you can assess your risk as you're trading or investing or speculating in GameStop. And if you're going to suggest to me that GameStop has 2 board members who have CFO experience and somehow that fills the role of GameStop not having a CFO, I'm going to call you a clown, because you don't understand the day-to-day tasks, roles, time, and responsibilities of a CFO, and maybe you should go check that out instead of lying to your audience, telling them that having board members with CFO experience covers their bases. They got plenty of CFO exposure. You clearly have never talked to a CFO. You clearly have no idea what a CFO does on a day-to-day basis, if that's what you're telling your audience.
So precedent is, he's supposed to have all these people. So I don't think that he's committing fraud or he's going to jail. I think what's really sad is he floats stock and these idiots buy it. I mean, they're just...
Yeah, that's basically what it is. And that's kind of where I wonder if there's, because I don't think like from a CEO, from a leadership is doing anything like, illegal, but it's almost like from a security, like from a securities like a standpoint, because like if he knows what it's really worth, and they're basically just leaving the stock to exist as like a GoFundMe, avenue, then like, I mean, I guess it's okay, but like, it's pretty wild. It's
maybe Ryan Cohen knows that he has a plan, but if he's going to double the value of the business, why are people paying that now? Why don't they wait till he shows them that he's actually on track?
Yeah.
And it's really the oddest thing I've ever seen. No, there's no precedent for it. Soaking the rubes is, what all grifters do.
Thanks, Mike. Appreciate the thoughts. Good update.
Thank you all.
Now, I'm not too fond of them calling investors idiots or rubes. I don't like when people talk to retail investors like that, but you should understand how Wall Street is valuing the stock. This is Finance 101 stuff. Any freshman in college could tell you how to properly value GameStop stock. And the folks on YouTube are not telling you the correct way to do it. Of that, I can promise you. Now, if you want to speculate on buying GameStop at $20, $22, $23, $25, and hope that Roaring Kitty comes back, or hope that there's some news from Ryan Cohen, an announcement about an acquisition that sends the stock shooting up, hey, knock yourself out. I'll be probably playing a little bit of that with you, but I understand what the proper valuation is, and I am telling you that it is overvalued right now. So if I'm speculating in GameStop right now, I understand the risk I'm taking, telling you straight up, it is speculative, it is overvalued, it is overpriced until we have some news. And if you tell me, Tony, I get all that and I want to invest in it anyways, and I understand the risk and that these shorts are probably going to try and push it down, God bless you. Knock yourself out. At least we're on the same page. Be honest with yourself. Be honest with your audience if you're a YouTuber. If we want to speculate, let's just call it speculation. If we want to talk about fundamentals or valuation analysis, do the math. Do it the right way. Talk about return on equity. Talk about enterprise value to EBITDA, talk about earnings per share, price to earnings ratio, things that actually matter for how to properly value this stock. Because right now on any of those measures, it is overvalued. It's just a bet on Roaring Kitty or Ryan Cohen. And again, I'm okay with that if you say I am speculating. I believe in them and I want to overpay and I have trust that it's going to go up considerably on news, and I will sell when it runs up. Man, it drives me nuts, these people that are saying, I'm not going to sell even if it runs to $100 or $200 or $2,000. I'm still never going to sell. What are you in the damn stock for then? Thank you for watching, guys. I am Tony Denaro, and I will see ya on the next video.